So let's talk about index funds. They're undeniably the best investments, and while investors in the US or the UK can buy index funds directly from fund companies, the rest of us are not that lucky. So in this video, I'm gonna share with you how to invest in index funds if you live in the Middle East or anywhere outside the US or the UK. Make sure to watch till the end because I'm gonna highlight a couple of common mistakes most index investors make and how to avoid them. Hey, what's up? This is Eli Irani from Wise Investor, and this channel is all about helping you save your money, grow your wealth, and achieve financial independence. In a previous video, we've introduced index funds as the best long-term investment for most people. If you don't know what index funds are, I highly recommend you start by watching this video. I'll also include a link to it in the description box below. US or UK residents can invest in index funds directly with fund providers such as Vanguard. However, these index funds companies do not serve investors outside their local home countries. Therefore, index investors in other countries, including US and UK citizens living abroad, have to use a different alternative. And that is by buying and holding exchange-traded funds or ETFs using a trading account. I'm gonna walk you through the process of investing in ETFs in just a minute. But first, what's an exchange-traded fund? ETFs are the closest siblings to traditional index funds that are widely available in the US. An ETF is a fund or a basket of stocks, bonds, or other securities that typically tracks an index such as the S&P 500. It is traded just like a regular stock, so it could be bought or sold within a trading or brokerage account. And it is listed for trading on a stock exchange or market, like for example the New York Stock Exchange or the London Stock Exchange. Now that we know what ETFs are, let us dive into how to invest in them. The first step is to open a trading account with a brokerage company, or a broker for short. There's, however, a few things to consider when choosing a broker. To start with, it must be large, reputable, and highly regulated by trusted authorities. It should ideally offer a large selection of ETFs, although practically we're gonna just need a couple of them. It should also provide access to global markets, not just the US. More on that later. And it should be able to serve investors in your local country of residence. I would avoid any brokers that focus on CFDs, forex, or commodities trading. In my opinion, these are highly speculative in nature and have absolutely no place in a simple index investing strategy. Remember, investing in ETFs is what we're looking for. There's no perfect broker out there, but my favorite offshore brokers include Interactive Brokers in the US, Saxo Bank in Denmark, Swissquote Bank Ltd in Switzerland, and Swissquote Bank Europe in Luxembourg. All these brokers serve investors globally, including those in the Middle East, with the exception of just a couple of countries. To open a trading account, start by visiting the broker's website and then select the option to open a new account. I've included the links to these brokers in the description box below. You will be asked to provide some detailed personal information, so make sure to have this ready, including any supporting documents, such as a copy of your passport or ID, a proof of address, bank statement, etc. Once your account has been created and verified, which by the way could take up to a couple of weeks, the next step is to fund your account. This is typically done by making a money transfer or a wire transfer from your local bank to your broker account. The process might be slightly different depending on your bank or your broker, but you typically need to provide the following information when initiating a wire transfer from your bank: your full name, your brokerage account number, the SWIFT or BIC code for the financial institution of your broker, the business address of your broker, and finally, the amount of money to transfer and your chosen currency. All the brokers we mentioned earlier accept all major currencies such as US dollars, British pounds, or euros. Once the transferred money reaches our trading account, the next step is to buy our first ETF. But before we do, if you're getting value out of this video, please hit that like button on YouTube. It only takes a split second. It's totally free, but it really makes a huge difference. Now back to buying our first ETF. For that, I'm going to use one of my favorite ETFs as an example, which is the Vanguard FTSE All World. This is a global stock ETF with nearly 3,700 stocks from around the world, and it's traded on the London Stock Exchange. To invest in this ETF, we first log on to our trading account either on the web or mobile app. Now the process is slightly different for each broker, but in a nutshell, we start by searching for the ETF either by using its name or its ticker symbol. For the Vanguard FTSE All World in US dollars, the ticker symbol is VWRA. Once we find and select our ETF, its price and details are usually shown. Now all we need to do is to enter the quantity or the number of ETF shares we want to buy, hit the buy button, confirm the transaction details, and we're pretty much done. Now let me know in the comments below which broker you ended up choosing, and I might create a video guide on how to create your account, how to fund it, and how to buy your first ETF. As I mentioned at the beginning of this video, there's a couple of mistakes that beginner index investors make. The first one is a mistake that I made when I first started. After learning about index investing from books and other materials that are US-centric, I ended up investing in the ETFs that are typically recommended in these books, such as VOO, VTI, BND, etc. These are all US-domiciled ETFs, which means they are issued in the US and are typically traded on the US stock exchanges. And while they're excellent ETFs for US investors, they're totally unsuitable for non-US investors because of a couple of tax reasons. First off, non-US investors holding US-domiciled ETFs have to pay 30% in withholding tax on dividends that are paid out by these ETFs. The second one is even more serious. If a non-US investor passes away with more than $60,000 in US-domiciled ETFs, up to 40% of that money will have to be paid in estate tax, also known as inheritance tax. Therefore, it is best for non-US persons to avoid US-domiciled ETFs and instead invest in Irish-domiciled ETFs that are traded on the European stock exchanges. And here's another mistake beginner investors make. As soon as they learn about ETFs, they would like to jump right in. However, buying a couple of random ETFs and hoping for the best is not really the best investment strategy. Therefore, to be a successful investor, you need to have a plan in place. So click or tap this video card on the screen where I walk you through an easy-to-follow plan for investing in ETFs. Or click or tap this card to watch another video. Remember to subscribe if you haven't to get notified when my next video comes out. Thanks again for watching, and I'll catch you in the next one.